It's glad to have you join us on this week's edition of Business Incorporated. You're welcome. I am Bolaji Akinwale. Consumer banking is one area that is of interest to authorities in the financial markets. Nigerian banks are displaying great passion for retail banking and are committing funds to research, capacity building, and the development of infrastructure to harness the vast potential in that segment, which experts say is the future of banking globally. Our guest is the regional head in West Africa at Ernst & Young, Henry Egbike. Before we talk to Henry, let's take a look at some business stories during the week. Our top story is the Central Bank of Nigeria's plan to roll out its cashless policy to 30 states from the 1st of July.
The Central Bank of Nigeria has indicated that the third phase of its cashless policy would commence as scheduled in the remaining states of the Federation from the 1st of July. According to the Apex Bank, the nationwide rollout of the cashless initiative became imperative following the success recorded in the first and second phases. The bank, however, added that as was done in the first two phases of the program, a one-year waiver has been granted on the application of withdrawal charges in the states. This implies that withdrawal charges will continue to apply on transactions above the specified limits in Abia, Anambra, Lagos, Ogun, Kano and Rivers States and the Federal Capital Territory. The Central Bank Governor, Godwin Emefiele, while unveiling his 10-point agenda on June 5, announced the cancellation of deposit charges on cash deposits, meaning that individuals will no longer pay the 3% penalty for any amount above 500,000 naira deposited in a day, while corporate bodies will no longer pay 5% for any cash deposit above 3 million naira daily.
Over the course of the pilot, we have become aware of complaints by customers, particularly regarding the charges being imposed on cash deposits. This has resulted in customers devising various means to avoid the charges through opening of multiplicity of accounts and other disingenuous behavior, all aimed at undermining the objective of this policy. Given these outcomes, and to better reflect our goal of having more cash under our control, all charges on deposits by customers of banks are hereby stopped with immediate effect.
The federal government has said there is no going back on the July 1 deadline for the commencement of the 70% tariff on imported new cars. It's therefore dismissed the report of a possible extension of the deadline to January 1 next year. It said that only the implementation of the 35% levy on imported used cars will be delayed to the end of the year. The National Automotive Council said the July 1 date for the new cars remains sacrosanct and there is no intention whatsoever to subvert or postpone the auto policy. In November 2013, the federal government had raised the duty and levy payable on imported new and used cars from 20% to 70%. The policy was aimed at encouraging local production of new vehicles, as 0% was placed on the completely knocked-down units required for the local assembly plants. The government had earlier fixed April 1 for the implementation of the new tariff on both classes of imported vehicles, but later decided to phase the implementation of the policy. Already, the first phase of the policy involving 35% duty increase has come into effect. The second phase of 35% increase in levy is expected to commence on July the 1st.
Consumer banking is at the heart of financial institutions in Nigeria at the moment. And of course, the saying, consumer is king, is apt at this point. Henry Egbike is the regional head in West Africa of Ernst & Young, and he talks to Business Incorporated about the importance of consumer banking. Thank you, Mr. Egbike, for your time with us on the program. First of all, I'd like you to tell us your view about the development in the financial services sector.
I think what we've seen from where we sit is that stability has returned to the financial services sector. on the back of the economic crisis, the financial crisis took a toll on financial services sector. We've seen that the banks have internalized the lessons learned. There's a lot of concern now around risk management. Of course, as you know, one of the causes of the global financial crisis was a result of lack of proper risk management. The bad loans, the bad credits, the bad, that came through. But we've seen the lessons learned. The banks are spending more time, making more investment in ensuring that the quality, the risk management system process are strengthened. We've seen also strengthening capacity in terms of human capital in that sector, which is very welcome. It's a welcome development because prior to the crisis, risk management was taken like a back seat. It was taken like a back office. So there was not much attention. And the importance of that now is played through. And we see the banks making the right investment in that sector. I think they played their role well. Again, there's still concern around are they doing the core banking that they should do? How are they supporting the risk sector in terms of when you look at the manufacturing, for instance, why is our manufacturing sector still down? Interest rate is still too high. A lot needs to be done in that space to make facilities more attractive to the right sector so that we can drive proper economic growth. I think that's still a big concern.
When we talk about consumer confidence in Nigeria's banking sector, what do we focus on?
I think the survey that we just released is about looking at the customers' confidence in the banking sector, and we titled it "Winning Through Customer Service." I think customer experience, customer service is very, very important. The banking sector need to focus on customer excellence, customer service, because that's a driver. So for any service industry, the customers are the king. So every sector that's operating in the service industry needs to focus on customers. And what we're seeing is that customers are concerned about how they are treated. Customers would like to continue. They would like to bank with the institutions that treat them very well, institutions that actually respond to their complaints, institutions that communicate with them, on a regular basis, institutions that are also transparent about the fees that they charge, all the charges, the rates, and all that. So that's what our report. That's what the feedback we got from our report.
How much do you think consumer confidence has contributed to the growth of the banking sector?
Yeah, I think it's a competitive landscape. So the banks that want to grow must ensure that they continue to focus on the customer satisfaction. So because of the competition, the banks that are more customers friendly, that pay more attention to customers, will get a larger share of the market. As I said, there's competition for the share of the market. The customer base, you need to get more customers out of the customer base. So the more focus you are on the customer's experience, ensuring that you treat your customers well, so that they come back to you. They can also refer you to their friends and relatives. In terms of, that's what we talked about, the advocacy. So it's a satisfied customer that will recommend your bank to another, to a friend or to a relative. So that is going to, that is going to help the banks to grow their customer base and also drive the growth of their business.